It's a real pleasure to be here. First of all, I have to say that I was exactly 10 years ago in Sinaia at FIAR speaking about the regulation of brokers. So it's the second edition after 10 years. At the time, I was basically trying to introduce the concepts of the now in force directive on the intermediation into Romania in its accession process. And now Romania, of course, as Slovenia and many other countries are full member states, and now we are facing the IDD directive, many other legislative acts, and I think it's time to revisit maybe some very basic concepts, issues and questions relating to the distribution of insurance in general and brokers in particular. I will start from the very start, because I think in this hypertrophy, it is let's say, overproducing of the pieces of regulation, we tend to forget what is the purpose of the regulation. I will start with some inherent problems in the distribution of insurance, or inherent risks pertaining to the insurance business model. Insurance, in my view, I like insurance. I spent all of my professional life in insurance. But insurance, in my view, is really the most successful way of transferring the risk within the society which has been devised by humankind. And I know it sounds a bit pompous, but I do believe it's so. But it has its own problems, which are very, very different from from the distribution of other products and services. Basically, the problem with the insurance, if we can compare it to the banking products, which is probably the most easy, is that everybody needs insurance, but nobody wants insurance. When you think about a loan from the bank, you think about what you're going to buy with the money from the loan. You think about a new car, you think about a new house, you think about a holiday or whatever. The Italians have a saying, if I go to the bank, I button up my jacket to impress the banker so that I will get the loan as easy as possible. On the other hand, when we are talking about insurance, it's about risks which the individuals or the business is facing. And when an insurance agent or broker or salesman, whatever kind of salesman, comes to your house, basically knocks on the door and says, you can die, your house might burn down, you might have a car accident or whatever. Yes, we can protect you up to a point, but you will need to pay for it. And when the accident happens, in any case, you will not be fully recompensated. So it's very hard to sell something like that. And it's the nature of insurance. It's easier to sell it in the business environment, but it's very hard. And therefore, of course, it's a very much a supply-driven or push product or service or whatever you want to call it. And again, it's not a qualification whether it's good or bad. I'm just saying that it's completely different selling insurance as compared to anything else. So historically, the sales model is commission-based. And this, of course, represents a considerable conflict of interest, especially in case of brokers, which are supposed to act on behalf of the policyholders or of their clients, whatever. The broker is a representative of the insured. He's being paid commission for this, and historically the insured didn't know what is the commission, and maybe that the broker is paid different levels of commission from different suppliers. So we have particular issues. I don't have the answers to them, but I will give you some of my thoughts. My first thought is, if a policy, first of all, it's very complicated to talk about the brokers in the same way as any other intermediaries, because most of other intermediaries are acting on behalf of the insurance company. So basically, they are their agents or their prolonged hand or whatever you want to call them. The broker essentially is the representative of the consumer or the policyholder, whatever it be, being a consumer or professional. And I think all the regulation, all the supervisory practices, all the business practices should be viewed in this way. If I am a private consumer, if I retain the services of a broker, am I still consumer? in a sense that I'm not professional, or should I be treated as a professional because I have professional assistance from the broker? So this is the first thing which is important to have in mind. My second issue on brokers is the big question on ban on commissions, which has been around European Union for a long time. My personal view is that ban on commission is not good. I do believe that if we would overnight ban the commissions from the brokers, this would have such a disruptive influence on the market that it would eventually lead to lowering of insurance protection within the society at large. So this is my categorical position on this. But on the other hand, I'm for full disclosure of commissions, full explanation to the policyholders how the commission is based, what is the structure of commission, what is the, I don't know, no claim bonus on renewal, or whatever it might be. This is the second issue. The third issue is, as Juan Ramon said, in Spain there is going to be a consolidation. There are 5,000 brokers in Spain. I have no idea how many are in Slovenia, or I have an idea, but it's not important. There are many small businesses operating as brokers. We have had at EIOPA level a long discussion on how to apply proportionality principle to the brokers. And of course, there is a strong argument, if there are so many single individuals having their own business as brokers, should we not apply proportionality in a sense that we will lower the requirements from such small businesses? My answer is no. We can apply proportionality in relation to the risks to the consumers or to the clients of the brokers. If the broker is selling, let's say, simple products, yes, we can apply principle of proportionality. If the broker is selling complex products, which might or which usually have an important impact on the life of their clients, the proportionality should not be applied. It's just the rules of the game. It's just the cost of the business, and I think it will result in consolidation, as Juan Ramon said. My fourth issue is on the role of brokers as manufacturers. I think the product oversight and governance guidelines as issued by EIOPA and the whole concept, which is partially ingrained in the Solvency II directive and in the IDD directive, will profoundly change the business model of the insurers and the intermediaries. On the insurer side, I think what is really important and what also brokers need to have in the consideration is that the ultimate responsibility for anything what is wrong with the product or how it is sold lies with the management of insurance company, and the brokers need to find their own place within this new system. And for the brokers, the most important is how do the brokers see their role as the manufacturers. I'm aware of certain business models within European Union, for example, with assistance companies, where an assistance company is basically having a product, designing a product, and acting as a broker, and then transferring risk to some insurer. And basically, I would say the responsibility and the liability of a broker in such case should be thoroughly evaluated. Another issue connected with the product oversight and governance arrangements is there is a let's say strong will that, I mean, one of the most important parts is the target market identification. Basically, we have two issues. One is might have a bad product, or you might have a good or neutral product which is sold in a bad way. So how it is sold, what is the role, where the brokers will position themselves in the target market identification, and what will be the role in this process. These are 5 main issues as I see it in relation to the new regulation of brokers. Now I'm coming back to my good friend and one of the, let's say, fathers of Solvency II regulation, Paul Sharma, who was at the time at Financial Services Authority in the UK, and now he went to the other side, he became a consultant. In 2015, we have had a conference in Ljubljana, and basically the question for him was, what will the most profoundly change the business model of the insurance industry? And of course he said, first of all, it's IT, which is obvious to everybody. Secondly, the prudential rules, i.e. Moving to the risk-based model. And thirdly, it's market conduct rules, and which is basically relating to intermediaries or to the sales of insurance. What I think is important, if we have spoken in the past in different categories, we were saying, okay, we have systemic risks, which is, let's say, reputation of the insurance market as a whole. We have prudential risks, i.e. the insurer is not able to pay, to stand by its commitments, and we have consumer protection rules. These were really three separate areas. With IDD directive, with Solvency II directive, with product oversight and governance arrangements, basically the three of them come together. We cannot separate anymore the risks which are purely market conduct or consumer protection risks and prudential risks and systemic risks. That's, I think, it's very important. And I will conclude with this, that we all need to do the rethinking of the insurance and consequently the brokers' business models. Thank you.